Welcome, everybody. It's Gene from the AL family, and I'm here with a very special guest, special friend, Mr. Russell Gray from the Real Estate Guys. How are you doing?
Good. Happy to be here.
Yeah, I'm glad you're here too. We notice we're only doing little fist bumps here instead of handshakes and stuff. You know why, but we're going to talk about that. We're going to talk about the opportunities that come our way, and sometimes we're not expecting them. Sometimes they come out of the blue. But you just said something. We're going to jump right in that this right here is a gift.
It is a gift. It is a gift. You know, crisis, the flip side of every crisis is an opportunity. And when you train your brain to think that way, what happens is when you enter into a crisis, you go, okay, somewhere on the other side of this, not even on the backside of time, but just on the flip side of how I'm looking at it, there's probably going to be an opportunity. Every entrepreneur knows that businesses are built on solving problems. And a customer walks in the door, they have a need, they have a want, they have a desire, they have a problem.
Yes.
And a good salesperson will diagnose that problem just like the way a good doctor would, and then prescribe a solution. And when the customer buys that solution, that's called a sale. We know in your business that people have aging parents. They don't know how to take care of them. They don't have the time to take care of them. They need help. And the need is beginning to overwhelm society. It's like with this whole COVID thing, people are aware, oh my gosh, we might overwhelm the hospital system. Well, guess what? You got the tsunami of people called baby boomers that are going to go from their 60s to their 70s to their 80s to their 90s, and there aren't enough residential assisted living facilities for them to be in. That's a huge opportunity. You've turned it into an entire career.
Yeah.
And that's the point. And this right now is creating, more opportunity.
So we're going to come back to opportunity, and I think, let's just address it because, when we talk about the opportunities, we talk about the idea of what's happening in these homes. One of the things that drives me crazy is I hear the news saying all seniors are dying and the homes are being wiped out. I saw a graph the other day saying 59% reduction in the value for senior housing. And I'm inside the business and I understand what's going on and so on. And so much of it is disinformation, false information, misplaced information, but share your side of it.
Well, I think first of all, you have to realize that, traditional media gets their attention. It's a very crowded world now. And they don't just have exclusive rights to a distribution channel the way it used to be, a frequency or a broadcast channel. And so they don't have captive audiences. They have to compete for attention. And what they've learned, and I think, anybody in marketing understands this, that people who have money, and that's who watches those types of shows, are afraid of losing it. And so what they lead with is fear, uncertainty, and doubt. That's what gets the attention.
Interesting.
Because people are afraid of losing. When you are talking to people who don't have anything, you have to offer them hope and opportunity because they're not really afraid of losing. They just are hoping to make their first million. But when you've got a couple $1 million or more, you're worried about how do I hold on to what I've got. When you're older in life, you're like, I don't have time to start over again. These are the types of people that financial media is talking to. Number two is financial media is largely paid for by Wall Street. And so most of what they say is designed to make their sponsors happy. And so it's good information and you should watch it. But you also have to understand the paradigm, where they're coming from. And then you have to filter it. And that's why, it's important to listen to alternative voices. I mean, obviously we're in alternative media, if you will. We're not mainstream financial media, but we talk to people that you wouldn't otherwise normally hear. We talk about subjects you wouldn't otherwise normally hear. There's good principles that come out of paying attention to what they say in traditional financial media, but there's a whole other side of the story that they never take into consideration. And you mentioned earlier the idea of being a realist. Jim Collins in his book, Good to Great, said you must confront the brutal facts. If you want to be great, you just have to look at what's really happening, good, bad, or ugly, and you have to face it with an unwavering faith, he says, that whatever the facts are, you will find a way to navigate them and produce a positive outcome. He goes, that's the secret to great companies. It's also the secret to great investors, great entrepreneurs. Anybody that can look at a set of facts and not be afraid. Sam Zell, he's a bigger real estate guy than Donald Trump ever was, right?
Sure. Oh,
and since Donald Trump's no longer a real estate guy and a little controversial, we won't mention Donald Trump's name. Okay, but Sam Zell said in his book, Am I Being Too Subtle, that his real secret to success as an investor was his ability to see the downside. He goes, look, everybody sees the upside. The problem is people see the upside without seeing the downside. They have no contingency for the downside. And then they run into the situation seeing the upside, and then the downside smacks them. And that's where they lose. And you can't win if you lose. The first step to winning is not losing, right? The first step to, in football, they used to say, if they don't score, we can't lose. It might be a tie. We got to do offense too. But at least if they don't score, we can't lose. So you always have to play defense as an investor, as an entrepreneur. But looking at the brutal facts isn't meant to paralyze you. It's not meant to get you to, curl up in the fetal position and suck your thumb and pull your, sheets over your head with your hand sanitizer. That's not, that's not what it's about. The fact of the matter is, in your business, there is a huge demographic. They're not going anywhere. Second thing is they need to be cared for. So the basis of the opportunity in your business hasn't changed. The only thing that has changed is the perception of the risk for people who are outside the industry looking in. You're inside the industry. Your perspective means so much more to me than anything anybody would have to say. And the other thing is they're typically going to be talking about companies that are publicly traded. They're going to be talking about big box companies that are going to be reporting earnings, and they're all trying to project forward what they think these companies' profits will look like so they can bet on their stock movement, because that's their game. Well, that's not our game.
Right.
I mean, we invest for cash flows. We invest to own real assets. We are Main Street investing in Main Street, looking to provide genuine services and get real value for our money. We're not in there just flipping chips in the casino, skimming. I mean, there's no love lost between me and Wall Street. You know that, right? Because I don't see them adding any value. That's why I do what I do. I want to see Main Street investing in Main Street and providing real service for real value.
So I think first of all, great stuff. Appreciate you sharing, because I love your perspective. But one of the things you said is always look at the agenda of what somebody is saying and the why they're saying it. And I do that all the time as well. And even when I talk about that one chart where it says 59% value cut, it's because they'd rather you take your money out of that and put it into Wall Street, buy stock. It could be as simple as that. But I also just know the fundamentals of it. I was actually reading another study, the idea of there's less move-ins currently. Think about that. Somebody needs to move their parent into assisted living, but they're saying, I'm not going to do it right now because, of course, they want them to stay where they are and not make any change at all. It's the fear of movement. But there's also less people moving out. So they're in there and they're not moving out either. So it's kind of a plus minus on that. But I know a lot of our students are in the middle of projects or starting projects saying, should I, or should I wait, should I pause? And I'd love to get your perspective on that, because I know I have mine, but your perspective on should somebody continue forward if they're on a path, or how should they analyze things to look at it differently?
Yeah, so that's a great question. And obviously, to give a global answer, every deal is different. Every set of circumstances is different. You have to use your own judgment. But I think generally speaking, if the fundamentals of why you were moving forward to start with haven't changed, then the general direction, the general feeling should be, I still need to move forward. There is going to be customers, there's going to be needs, there's going to be profits to be made. The fact that the entire world is on timeout trying to figure out what's going on, imagine you're going down the road, 70 miles an hour on the road to riches, whatever it is your road to riches are. Storm clouds form. You're like, uh-oh, something's up. And all of a sudden, boom, crack, and there's a dead tree, a tree in your path. Well, you're still committed to where you're going,
right,
but you can't go full speed because now you have an obstacle that wasn't there before, and you don't really understand. Is this thing movable? Am I going to have to navigate it? Is somebody going to come along and remove it? Not quite sure. So in that timeout period, that's where we're at right now as we're recording this. So if you have a project and the fundamentals haven't changed, then you just have to look at whatever obstacles are in your path. Let's say, for example, you're in the fundraising cycle and you're there and you're trying to raise money and you've got, a level of commitments and your money is lined up and you start making the calls and 50% of your money backs out because they don't want to move. Okay, well, then you're going to have to go get twice as many people to say, yes, I'm interested, to get the same amount of money. You're going to have to work a little bit harder. You might have to slow down a little bit because you can't go as fast, but you haven't stopped moving. And even if you take a time out in your activity, you still haven't stopped because now you're thinking, right? Every plan starts with a vision and then a plan, and then you start taking action on the plan, and then you get feedback and you adjust and do iterations. And there's no such thing as a straight path. You know, you've been an entrepreneur and an investor long enough to know, you know, you plot it out on the chalkboard, you go, this play gentleman's going to run for a touchdown, you know, and then somebody comes in and they stop you and the guy's got to juke and jive and you've got to adjust to what's going on. But you never give up on your goal.
You know, and totally agree. And that's why I love talking with you, because I totally agree with most everything you say. But you know, one of the really interesting things is that out of all the businesses that are out there today, whether it be a restaurant, a retail store, whatever service industry you have, this is one that is simply not going to go away. And it's something that is, if anything, is more needed than ever. I heard somebody tell me today, they said, I think people are going to stop putting their mom and dad into these homes because they're going to take care of them at home themselves. It's like, pause. Most of us are not designed to do that. God didn't create me that way. I'm not going to do that. But I just thought that was so in their mind, that's what they're thinking. I think, and you alluded to this at the beginning, this is a gift. It's an opportunity. We have a moment in time where some others are even pausing, and now it allows us to go even farther.
Well, so real estate's changing. We were talking about that pre-recording. And, you know, part of what's changing, and it's happened very quickly, very quickly. You know, people, because of what's happened, are rethinking, do I want to be crammed into an urban setting? Do I want to be in a densely populated apartment building or apartment complex? Do I want a lot of common areas when I'm mixing with people? Or now am I more interested in having my own private backyard, my own swimming pool? Is the suburban life coming back in vogue right now from this kind of swing? Is moving out in the country. People right now have discovered, many businesses have discovered, hey, we really thought that we couldn't operate remotely. And now we probably could take 40, 50% of our operations and we can hire the best people no matter where they live. And we can pay them maybe a little bit less for the convenience of working at home, be in a more business-friendly jurisdiction, and they can go live at a place where the lower salary gives them a better quality of life because they're not in a crowded environment and they don't have to have ready access to a commute and only be 30 minutes out from the office. I mean, it doesn't matter where they are as long as there's good connectivity.
It's true.
So that's going to affect real estate. So things change, and that's why when you have these mega events that change people's thinking, and it doesn't matter if you agree with them or not. I mean, one of the biggest things in our business is that politics affects what we do. You know, monetary policy affects interest rates, the supply of money in local jurisdictions, local building codes, whether or not clean energy, climate change. And these are controversial topics. Right? People like, you should wear a mask, you shouldn't wear a mask, you should, you know. Hey, last time I looked, there's no politicians or central bankers calling me going, Russ, what do you think we should do, right? They don't care. So it doesn't matter what I think. It doesn't really matter what you think because I doubt they're calling you either.
Nope.
At the end of the day, it only matters what they think. It only matters what the marketplace thinks. And, you know, we may say, okay, these people think this is the way it's going to be, but are they the decision maker? See, I'd be much more interested in knowing, and you have this, right? I'd poll all your students. Say, hey, all of you people that are, do you have more traffic or less traffic coming in? When people are coming and looking around, what kind of questions and concerns do they have? What's changed? Are they asking more about your safety protocols and the density and the interaction? How many visitors come in, what your visitor policy is, what's the exposure to the outside world? Is that gone up by 10%, 20%, 100%? Do you have people saying no because they're too concerned? Do people who you were talking to, have they backed out because all of a sudden they don't want to move forward because they're afraid and they're going to take over? If you called me up and said, hey, I just polled 1,000 of my students and 90% of them told us that they have lost business in the last 3 weeks because people have come in who were all set to sign a contract and come on board, and they backed out. That's real.
Yeah.
If some pundit, some talking head on TV has an opinion and you think, this is what's going to happen, he's not qualified to have an opinion because he doesn't know. Yeah. He's projecting his value system on the marketplace, and that's a huge mistake for any of us to do.
You know, that's really good, and it makes me realize we ask our everybody in the National Association questions, but I need to do a formalized survey on like a weekly basis.
Well, and the thing is, Gene, really, I mean, I'm on the media side of things, right? That's valuable intel.
Yep.
You could have a publicist pushing that out to all kinds of media outlets who get you all kinds of free exposure, just bringing the real-time data. And if your data refutes some of these talking heads, great, you're going to change the marketplace mind, okay? But get ready.
Uh-oh.
Your data may refute your opinion.
Yes.
And then you're going to have to confront the brutal facts.
Well,
and whatever it is,
I'm okay with it.
It's just an obstacle, and you make adjustments because, again, the core need isn't going away. If all of a sudden the vast majority of people who were going to put people in your homes are now going to be caring for people in their homes, your intellectual property on how to care for people in a home setting is a product. It's a training thing. So there's still an opportunity on the other side of that for the people that want to stay at home.
Yeah.
Because the need didn't go away. The opportunity is always the backside of the need. What people are willing to do to get their need fulfilled may change the product, the way you package it or offer it, but at the end of the day, the reason the business makes sense is the thing you've been saying since the day I met you. You have this silver tsunami, this overwhelming population of people entering a season of life that they invariably are going to need assistance to live out their old age.
Yep.
And that's not changing.
And I think that's a really key point. I just want to make sure we got that as a takeaway. The real key point to everything you just said there is if the fundamental reason why you're doing something is the same and unchanged, keep going with it. Let's talk real estate, because in real estate, like you said, things have changed dramatically. None of us have ever seen this. We've seen cycles. We've seen actually what happened 11, 12 years ago was pretty fast, but that was over the course of months and a year or so. We haven't even seen the effects yet. What do you predict the effects will be? Because right now, banks are a little more cautious. People are a little bit more cautious in regards to buying and committing. But let's talk single family pricing and valuation, and then we can talk about other things after that. What do you think is going to happen in the next 6 months?
Well, I mean, besides the obvious supply and demand, so you have to look at demographics, right? Just that's the basic, how much is built, how much is available, how many people want. And I separate in supply and demand. On the demand side, I take capacity to pay and I put that outside. Like in traditional economics, capacity to pay is inside of demand.
Okay.
But I think it's such an important topic, you got to break it out.
Okay.
And especially in real estate. And so when it comes down to capacity to pay, you're going to have jobs. I got a chance to interview Donald Trump, and I asked him a question, and the question was, Mr. Trump, we had this huge thing that happened in 2008, and a lot of people put that at the feet of the Fed and monetary policy and maybe even some of the government policy towards housing and making housing more available, and it kind of blew up a bubble that blew up, right? What's a healthy housing market or a healthy housing policy look like in a Trump administration? He gave me a one-word answer, and it's been the same thing he said from the beginning. And he's right, jobs. So, when we go in and look at a marketplace and we're looking for capacity to pay, the first thing we want to know in the geographic area is, what does a jobs market look like? What are the economic drivers? And are jobs being created? Are they the right kind of jobs for the kind of people we want to rent to or sell to, depending on what our product niche is? So jobs is number one. And jobs, next is incomes. Are real wages going up or real wages going down? Real wages is, not a nominal, not how much. I mean, you're old enough to remember when $100,000 a year was a lot of money. I mean, you were a very affluent person. Today, in a lot of places, you're like middle class at $100,000. San Francisco, below 140, you're poverty. I mean, you can't even, right?
Yes.
And
it's crazy.
It's crazy. But that's because it's just a number. That's what nominal means. Real is the difference between the cost of living and how much money you make. And if you are making more money than the cost of living, you have this wonderful thing called discretionary income, which you can use to upgrade your home, upgrade your lifestyle, to spend, and there's everybody competing over that stuff, right? Housing is considered a need, but it's a need in a person's budget to a level, and then after that it goes to being kind of a desire or a want, right? You can have a nice home or you can have a home, right? You can have a home and that provides shelter and that's a need. But above that, that's nice. So again, depending on what your product, if you're in affordable housing, you're going to have a broader demographic. I tend to be a fan of affordable housing. But you got jobs, you got real incomes. Then because real estate is purchased with leverage, you've got interest rates and healthy credit markets. There's two things that are going on right now that are, I think, yet to be determined. First is, in 2008, we had a small number of subprime borrowers go bad. But because those loans had been packaged up and stamped AAA, the percentage of borrowers in bad loans took those down enough to freak the investors out, the people who were buying the mortgage-backed securities. When that happened, they quit buying them. And when the bid came out, the bond prices dropped, which caused interest rates to start to move, which triggered more defaults. So it was a long, convoluted chain reaction. And because there was so much leverage, and I won't bore you with all the details, but in the derivatives, one default impacted a lot of mortgage-backed securities. And so there was just a big call for cash, and the credit markets began to collapse. When the credit markets collapsed, they took the jobs market with them. Okay, remember, answering your question about real estate.
Right.
Jobs, real incomes, which is inflation, are people earning above the rate of inflation, and then interest rates and availability of credit. So the credit markets collapsed and took jobs with it. This time, we destroyed the jobs market with a shutdown, 30 million unemployed, like in 3.5 or 4 weeks.
Yep.
Payments are going to stop getting made. That's going to affect the credit markets. Will the credit markets collapse and then reinforce the job problems? The Fed is trying to be in front of it, and we all see it every day. They've got fiscal stimulus, which is the government spending, and you've got monetary stimulus, which is the Fed printing, supplying the money the government's going to supply, also supplying liquidity into all the credit markets. They've been active in the repo market. They're active in the mortgage-backed securities market. They're even talking about going into the corporate bond and the junk bond market in addition to the treasury market. So the Fed is printing money like crazy. Their balance sheet went from like 3.8 trillion up to like 6.5. And I think a lot of people we've talked to don't think it's going to stop till it's way over 10. Which brings up the next big question. Can the dollar handle that? At some point, if you print so many dollars, they're not as valuable. That's what true inflation is. The question is right now, what's the alternative? There isn't really one. But if China or somebody were to come out with one, that could be the next black swan. Do I think that's going to happen? I don't know. It's a possibility, It's also a possibility an asteroid could hit the Earth. I don't spend a lot of time worrying about that, right? But you have to think about all the things that could go wrong, and then you have to apply a probability, and then you have to watch for evidence that shows that probability or possibility is becoming a probability. And then at some point you have to ask yourself, do I need to begin to take evasive action? I see a storm out there on the horizon, but it's miles away. I'm going to watch it. If it gets close, then I might start to batten down the hatches and, put the lawn furniture away because it looks like it's going to hit, or it might break up. You see it all the time with hurricanes forming on the coast of Florida. They watch it, and 90% of the time it looks like it's going to hit, and then it turns and it breaks up, and it's no big deal. But they watch because if it doesn't turn, you got to be ready.
Right.
And I think that's where we need to be at. We don't know. But what I'm watching is credit markets. I'm watching the relative strength of the dollar, which you can watch with both the dollar index, how it competes to other currencies, and then gold. To me, gold is like the litmus test for how the dollar is really doing. So
we're nearing not an all-time high, but a 10-year high. We're at a 10-year high now.
Yeah. Gold, I look at it like this. So you've got a world full of currencies. It's like a big ship. Let's call the ship, say, the Titanic. And on the back of it, you've got these really weak currencies like the Zimbabwe dollar or the Venezuelan bolivar, these just horribly weak currencies that they've printed into oblivion. They're not worth anything. Nobody wants them. That part of the ship starts to sink first, meaning the part of the ship that's outside the water becomes very popular. That's where the dollar is. The dollar is up at the front of the bow. And so this thing starts to sink and everybody's scrambling out to get in here, and that puts a lot of pressure, but the whole ship is still sinking. All currencies are falling relative to gold. Gold and silver are like the little lifeboats that are on the side of the boat. And when they hit the water line, right, there's going to be people who realize, wow, I need to jump. And then that's when gold really takes off. It hasn't done that yet, but right now in every currency except the US dollar, gold is at an all-time high. People have been fleeing failing currencies into both gold and into the dollar. So at a time when the dollar is relatively strong to other currencies, it's still shown some weakness against gold. And one more little word picture to help you understand, because people have a hard time, especially if you're not familiar with all this. Sorry if this is like, but if you were to jump out of an airplane with 10 other people and they pull their chutes first, or you pull your chute first, you're the dollar, you pull your chute first, you're still falling. But to them, you're rising.
All right.
Right?
Good analogy. Yeah.
And so that's what people don't understand when they only look at the dollar index, because all fiat currencies, paper currencies, are falling. They're just not falling at the same pace. And so one can appear to be strong. That's why you have to index it to something outside fiat currency, which is gold. That's why I watch gold.
That's because that was what I was going to ask you. And by the way, for those of you listening, if you've never heard Russell speak before, highly intelligent guy. That's why we're here having the conversation, because you can think things through. So I want you to keep your comments as best you can as easy to understand. You do a good job, but it's so easy to go really deep fast. And because you said, well, the weakness in the US dollar, and I'm like, but that's why they're fleeing. They're coming here. But your analogy of, yes, they're all just, this one's falling slower than this one, that I get. So that was a great analogy. It answered it for me by what you meant. All right, so let me just jump there. You mentioned gold. Do you think that people who are in assisted living or real estate or business or whatever should also have some gold or some metals?
Yes. Yeah. I
knew that was the answer, but I wanted to tee you up.
Yeah, but here's the thing. Even people who are, in the gold space, and, we go to the New Orleans Investment Conference and I get a chance to hang out with these gold bugs. They look at gold as a trading vehicle, and they measure its value in dollars. In other words, their goal is to buy low, sell high. I just don't agree with buy low, sell high. I like arbitrage. So arbitrage is making money on the spread. Well, so how does that work? In your business, you have your fixed overhead, your cost of labor, and whatever direct expenses are related to taking care of a particular individual. When you put all that in a blender, you have a cost to do. And then you have a cost to charge. And so the difference between the two is like arbitrage. It's a spread between the cost to do and what you can charge on an ongoing basis, and you produce cash flow. That's investing.
Okay.
Buying low, selling high, that's not investing. That's speculating. The only difference is if you have control over the value add. Like if I buy a ratty house and I fix it up and sell it for more, that's really still kind of not investing. That's a job, but at least you've added value. But you're not going to add value to gold. If I buy an ounce of gold, I'm not going to do a single thing to change it. I just hope to sell it somewhere for more. But it's not really worth more. It's worth the same. It's the number of dollars it takes to buy it. The dollar value went down. It takes more.
Take me down this route, because this is the logic that people don't want to ask because they don't want to hear the answer. What happens if, because what you're saying is the value of the dollar It's decreasing. Every currency is decreasing, right? So it's all going down. If we use this as the benchmark.
And you can look that up on the Federal Reserve,
Yeah.
St. Louis Fed. Go to the Fed and you can look right at it and you can see the purchasing power of the dollar for 113 years is down.
And if we're using gold as the kind of this is the solid, this is what stays, it's just that it takes more dollars or whatever currency in order to buy that same amount of gold. What is the probability, likelihood, forget that. What would happen if all currencies just become worthless? And how do they even things out? You know what I mean? If you have 10 million and I have 1 million, somebody has 100 million, do they say everybody just gets 1 million? Or do they say everybody's wiped out?
Well, I mean, who knows what they're going to do?
I know, but
nobody knows what they're going to do. But going back to the question of gold, you know, gold is like home base when you're a little kid and you're playing tag. You get to base and then you can pivot anywhere you want to go because you're safe until you make your pivot, right? So if I buy gold and the dollar fails, then I can buy the euro. In other words, I can sell the gold and take a euro. I can sell the gold and get a yen. I can sell the gold and get a yuan. Whatever currency, or if they create some international currency, an SDR like Rickards talks about, whatever it is, gold is my pivot point, right? Now, I just want to go back and help people understand value, you know, because, so if say in 1965, you took a roll of 1964 quarters and you put them in your sock drawer. If you were to take them down to the local gas station, that roll of quarters, 40 quarters, $10, would buy you 40 gallons of gas, because gas was 25 cents a gallon in 1965.
okay.
But if you took that roll, which is worth 40 gallons of gas, and you put it in your sock drawer, and then you took another roll of quarters, 1965 quarters, and you put them in your sock drawer, 50 years later, or whatever it is, to 2020, 55 years later, you pull them out of your sock drawer, the 1964 quarters will still buy 40 gallons of gas.
The 64 quarters.
Because they're made of silver.
Right.
And so the silver is money, and it retained its relative purchasing power for 55 years. Whereas the $10 roll of the 1965 quarters, which are copper plated or zinc plated copper, would only buy 4 gallons of gas. You've lost 90% of your purchasing power to inflation by saving currency, mistakenly thinking it's money. Gold and silver are money. And when you understand that, you use them for savings. I didn't get richer, I just didn't get poorer. Now, there is a way to use gold and silver married to debt. Gold and income producing real estate go together great because I can acquire a piece of debt, meaning I can spend dollars today, go buy a piece of real estate. I can get a stream of income to pay for that loan. And then I can purchase some gold with the money that I otherwise did not use on the real estate and sit over here. In time, if the currency continues to fall, in dollar terms, the gold will go up. It doesn't make me richer because it will still only buy the same 40 gallons of gas, but it will retire that debt for a fraction of the gold. So it's a way to use income producing real estate, whether it's a residential assisted living, an apartment building, or whatever you want. So I'm a big fan of converting real estate equity into gold, and I have a strategy for doing that I won't bore you with. But I think it's really important to understand that equity in a property is very fickle because the prices that are built into the real estate pricing is based on a lot of debt being available. And if the credit markets go away, as we saw in 2008, the prices come way down. That debt doesn't exist in gold. The gold price doesn't carry a lot of debt in it, which means the price is much more stable in a downturn. So if I can convert equity into gold, I actually preserve my equity and I can borrow against it if I want to. I can pivot into any currency I want to. And if we have a credit market collapse or a jobs market collapse that take down the price of the real estate, I don't get a margin call as long as I can continue to make the payments. So as long as my underlying, apartment building or residential assisted living facility is providing the cash flow to make the payments, but I've retained my equity over here. where it's safe and it's separate from lawsuits. There's just a lot of reasons to do it. So there's a lot of things you can do. But the point is, I think that what Robert and I try to do on the Real Estate Guys radio show is talk to people about real estate in the context of real asset investing and portfolio management. Most real estate people are transactional. They do deals. They go from deal to deal to deal to deal. But if you think about building portfolios, then things like gold and energy and making loans, being a lender for income purposes without capital calls and being on the other end of inflation just in case. There's a lot of place for these other pieces. I mean, you're a certified financial planner.
Right.
So you understand, at least from a paper asset perspective, the concept of asset allocation. But everything that you learn to do as a CFP, you can do with real estate. You can do with better quality assets. So the good part of the CFP program or any type of financial planning is that you learn to think in terms of portfolio, risk mitigation, diversification, asset allocation, and overall performance, balanced performance. Real estate people, they don't think that way. They just think about doing deals.
Yeah.
So you take that thinking, but then you apply it to all these other assets. Now you can really begin to build a portfolio. But the foundation of every real asset investing portfolio is income producing properties. And in your case, when you have control over the business too, it's actually, I think, more resilient than if I'm hoping somebody out there creates a job. I'm in charge of creating the job because I go out and sell and bring the tenant in.
So we've talked a lot about, we've talked credit, we talked gold, we talked about dollar against other currencies. We've talked all of that. We talked real estate. Let's talk this one, which I haven't even talked about it myself. The concept of it was getting problematic for us in assisted living because the labor pool was so small. The unemployment was down to such a low.
You just got a gift.
Exactly. And I haven't even started talking about that yet, but I look at our caregivers and it's like they're fully employed, working more than ever, getting overtime. It's like they are rock stars in this, and there's nothing that's going to stop that. So right now, the pool of people that's available, once the government stops paying them for sitting on the couch doing nothing, right? Because that's the other biggie. But the pool, the labor pool. So any thoughts on labor pool and what we do?
Well, I mean, in our business, we've been super excited about it, right? We haven't stopped, put on the brakes at all. In fact, we've gone just the opposite. We see this as a huge opportunity because people are paying attention. They're open to new ideas. I think they're looking at what's going on and they're seeing some inherent frailties. And to your point, it hasn't even rolled out. I think the story that's going to get told with respect to the financial system and the economy has yet to be felt, has yet to be seen. And so as that begins to roll out and people begin to realize that there's some things that are really broken, they're going to be very open. So we've been pushing forward. But when we sit down and talk about our growth plans, the one thing we say is, well, boy, there's sure a lot of talent available right now. So we can go out and look for great people to build with. I also think, there's all kinds of money. I mean, if you're out there capital raising, there's all kinds of people that had a lot of their net worth tied up in retirement accounts. And now those retirement accounts at a 401k, which were tied up with whatever the employer chose for a plan, now eligible for self-directed rollover. And that's capital is available to go to work, not back in Wall Street, but in Main Street. And if you can make the case that your particular home, your particular demographic, your business plan, your team is capable of producing a profit and a good result, a more resilient investment than some of the stuff they've been in, I think you can attract capital there. So that's a big opportunity. Obviously the labor side of it, as you mentioned, is a big opportunity. Again, there's always going to be opportunities in the middle of crisis. And the thing is, the people who get brain lock focusing on the problem and not looking for the opportunity are going to miss it. And then the people, you're not even going to go looking for it if you don't believe it's there. So you have to start with the premise, I believe it's there. And if I look hard enough, I'll see it. If I talk to enough people that are like-minded, we will see it together. And then number two, when I do see it, I'm going to study it to understand it. And if it checks out and I like what I see, I'm going to move on it. I mean, I know in my life, when I got older and I became more confident in my own judgment, things opened up for me. And early in my life, I would see things, I would see opportunities, and I wouldn't act. And then I'd go, oh, I thought of that. Oh, I could have. Well, yeah, but ideas are a dime a dozen, right?
right.
Do you execute?
So I want to get your opinion on the concept of, we started previous to the recording here, we talked about the idea of what are the opportunities with this COVID crisis in investment opportunities. But I think we need to think kind of two time frames, short term and medium term. The short term is 6 months. So let's call it the balance of 2020.
Yeah.
Kind of like 2020A, 2020B. The year that everybody thought of clarity and clear vision is now,
Clear as mud.
it's really interesting how that has changed. But now, so we're going to get through this. We're going to have, I think, and you tell me what you think, the stock market, we've got another leg down coming because we haven't gotten through the earnings reports, the bad news for the first quarter, let alone when the second quarter comes out, is going to be even worse. I think there's going to be a leg down. Let's just start with that. Do you think there's going to be a move down in the stock market? Not that you follow that, just your opinion.
So I think there's going to be downward pressure on the stock market. Will the powers that be, that have the printing press, the plunge protection team, the president's working group that they put in place after 1987 to plug the free fall, will the Fed set up proxies to be able to purchase stocks? Will the Fed create free money and empower corporations to get back in the buyback business again? Asset values, it's easy to manipulate asset values in publicly traded exchanges and try to pass that off on an unwitting public as a proxy for economic health. There's a lot of motivation to do it. There's a lot of motivation to convince people based on their balance sheet that they're wealthy when in fact they have no passive income and they're dirt poor. So do I think that there will be a leg down? I don't know. I think there's a lot of pressure to keep it up. Would I want to be in that? No. Do I think there's a lot of reasons why it should collapse? Yes. If credit markets collapse and people start getting margin calls, which I think is likely, because we've had an economic heart attack, and when cash flow stops, payments stop, and when payments stop, debt goes bad, and when debt goes bad, that leveraged debt gets margin calls, and when margin calls come, you have to sell anything you have that's marketable to raise cash. And so there's a lot of downward pressure. Will the Fed print enough money to buy everything everybody wants to sell? They're trying. Will the dollar survive that? That's my biggest concern. I don't know. But yeah, I think it wouldn't surprise me to see the stock market go down, but it also wouldn't surprise me to see the Fed and the federal government and private industry do everything within their power to try to prop it up, to try to placate a very concerned public and provide I think, a false picture of economic health that really isn't there. There's a difference between the economy and the financial system, and there is a difference between both the economy and the financial system and the stock market as far as looking at gauges and going, oh, this is healthy because we got a bunch of green lights on the stock market. I mean, we just came out and we just announced 20 million job losses or whatever it was, and the stock market went up because it wasn't as bad as everybody thought. How stupid is that, right? But that's what happens. And you say, well, who's buying? Or, are your friends and family, are they out there buying stocks? I don't think so. I think it's other people buying to manipulate the numbers.
In one world currency or cryptocurrency, is there what are your thoughts on that?
Again, I had a chance to buy Bitcoin like in the very, very beginning, and I didn't. I wish I did. Pure speculation, adding zero value. But if somebody let me take $1,000 investment and turn it into a $200 million profit, would I take it? Yes, I would absolutely take it because, the people on the other side of that trade were dumb enough to buy in. But with that said, I'm not a fan because it doesn't produce anything. Now people say, well, gold doesn't produce anything. I get it, but gold has been money for 5,000 years, and over the last couple of years, central banks have been net buyers of gold. In fact, buying more gold over the last couple of years than they had bought at any time since the early 70s when Nixon took us off the gold standard and the dollar collapsed. I think the central bank's behavior towards gold is an indication they're concerned about currencies. And it gets downplayed a lot in media because they can't accumulate if everybody else is trying to accumulate. So I'd rather be in gold than crypto. And from gold, I feel pretty comfortable that I would be able to pivot into whatever currency there was. The only other thing that some critics put out there is, gee, what happens if they confiscate gold like they did in 1933? Okay, well, they could do that. What happens if they confiscate real estate? What happens if we go full-blown socialism and they confiscate private property and private business? I mean, there's a lot of things that could happen. And what are you going to do? But absent those kind of end of opportunity scenarios, I think gold is a smart thing to have and a place I'd rather be.
Well, and I don't, when you mentioned Bitcoin specifically, there's so many of those. I just see that as magic beans. The whole technology behind it, the blockchain is different. But I'm just thinking it makes sense to me that a government, and maybe it's a worldwide something, would say, here is the one currency. Let's stop messing with all these different ones. It's just one. And I think that actually lines up biblically.
Well, I mean, I'll go on record right now and tell you what I think could happen. I think China has accumulated much more gold than they have let on. I think that they have been playing a long game where they've been lulling the United States into, I think, a false sense of security. I think we're starting to wake up. I think that China has looked at what the United States did to become the world's financial hegemon, which means the dominant force, and copied it. I laid that out in our Future Money and Wealth presentation 2 years ago, and nothing's changed. Just on April 28th, and Reuters reported this, the Shanghai Gold Exchange president came out and called once again for the de-dollarization. He says, after this crisis is over, we have to get off the dollar. Russia and China have been working on this for 10 years. And so they have the manufacturing, they have the oil, they have the army, they have the tech. If they have the gold and they come out and they say, we are going to introduce a gold-backed digital yuan backed up by our economy and purchasing power, that could crush the dollar. Now, I'm not saying they're going to do that, but I just think it's an interesting coincidence that we are so at odds with China right now. I don't have any inside information. I just look at what's going on in the news with the context of understanding the way kind of the financial, the geopolitical side of the financial thing works. And after 10 years, because 2008, I was ignorant of all this, right? I got wiped out because I was ignorant of all this. And I heard the buzz about the, mortgage-backed securities and the subprime crisis, but I had no idea what it meant. And so I didn't take, precautions. And then, by the time I turned around, the tsunami was on me. It swept me away, swept my portfolio away. Wasn't geared for it at all. And I thought, okay, I'm a smart guy. I'm a hardworking guy. How could I miss this so badly? Well, I wasn't paying attention. I was in denial. I was only looking at sunshine. I wasn't confronting the brutal facts. Yeah. And I went on a quest, as you know, and we made friends with people like Peter Schiff and Robert Kiyosaki and Chris Martenson and Adam Taggart and G. Edward Griffin and all these people to get different perspectives, some of which we agreed with, some of which we didn't understand in the beginning, but instead of trying to refute, we tried to understand. And I think over time, just watching what happens in the news and piecing it together, I think that could happen. Meanwhile, I think in anticipation of that, the IMF and a lot of the Western powers are still trying to, maintain power. And that's Jim Rickards' work, from Currency Wars all the way through Aftermath, his 4 books. He talks about his belief that they're going to revalue gold and they're going to issue these SDRs for international trade, and the dollar will just become a regional currency, not the dominant currency for international trade. That's what he thinks is going to happen. I don't know. But I didn't even know what the word SDR meant until I had read Jim Rickards and talked with him. So now I pay attention to that. So I think that whatever the answer is, I think that there is a worldwide level of pressure to try to remove the dollar as the world's reserve currency. And I don't think that anything the United States is doing right now is making an argument that it should remain.
I get that.
And so I think Americans in particular, but anybody that earns, borrows, denominates wealth in US dollars, needs to begin to think about and study what would happen if the US lost world's reserve currency. Somebody says, oh, that would never happen. Well, it might not happen for 5 years, it might not happen for 10 years, but how long would it take you to be ready for it if it did? I mean, if you figured it out yesterday,
Right,
you're not going to think of it tomorrow, right? So it's something you want to start to pay attention to.
Two things. SDR stands for?
Special drawing rights.
Okay, which still doesn't define it, but let's just leave it there because I know people will be asking. The second thing, you're now starting to ask questions, and I want you to just go, because see, I had to poke you a couple of times to get to, I want your opinion on what you think. The concept of, if the dollar is no longer the reserve currency,
Yeah.
how does that affect us?
So the value of anything, going back to economics 101, the value of anything is based on supply and demand.
Okay.
When you have supply, when you have demand exceeding supply, the value goes up. There's a bid on it.
Mm-hmm.
So if you have few dollars being printed and everybody in the world wants and needs them, then you're going to have a strong dollar because people are going to be working and earning and trading whatever they have or their currencies to buy dollars because they want them for safety.
By the way, the reflection, the way we see strong dollar or that is because they're able to sell treasury notes at a tiny little interest rate and people buy them.
Yeah, well, right now the Fed mostly buys them, and that's the secret.
Okay. See? So here's our problem is that...
And they buy them with dollars they print out of thin air.
And this is the whole, read The Creature from Jekyll Island to get a good overview.
Yeah, so it's, and the problem is it causes, if they can't sequester the excess dollars to manage the supply and demand, then the dollar could fall. Well, right now there's a huge demand for dollars, and so the Fed is able to print lots of them. But a lot of that demand comes from the currency being the world's reserve currency. People need it in international trade. It's considered to be a reserve currency. So, when you are a country out there and you want to save your trade surplus, you save it in dollars. Mm-hmm. What happens when you don't want to do that anymore? Now, everything you have this dollar denominated, you're not buying, you're selling. Well, who are all those dollars useful to if they're not the world's reserve currency? Who's the only people that are actually going to use them? Americans. Mm-hmm. So all those dollars worldwide that are no longer in demand worldwide all come home. Now you've got X amount of goods and services in the economy available, and you have flooded the market with dollars.
Isn't that what we're doing right now, though?
Well, we're flooding the system with dollars. We're not flooding the market with dollars.
All right.
Okay. Well, the way we'll know is when prices go up. And then, of course, the other side of this COVID thing is the supply chain disruption, because if supplies go down, dollars go up, then that's Venezuela. That's empty shelves with high prices. We got a little taste of that with toilet paper recently.
So that's what I wanted to correlate. Because there's so many things. It's like people focusing on a presidential election when really it should be your local city council, because that's what's going to affect you, not way up here. So Federal Reserve, all of the games that are played here, but down here, if my dollars buy me less or the price goes up because the supply went down, the demand is the same, so in essence demand is up, my $100 now it's going to take $200 to buy the same thing. That inflation could be absolutely... Where should we be for inflation? Are we back to gold once again?
Well, I mean, gold is a hedge for sure. Anything real assets.
So real estate.
Yeah, real estate.
Gold.
Energy, farmland.
And to be clear, when we say gold, you're not talking the ETFs, the GLD. Physical in my hand gold.
Physical in your hand gold.
Okay.
Yeah.
Just to make sure we're clear.
And goods and services. I'd rather have a full pantry and a full garage full of stuff that lasts and I can use or barter with. I mean, so it's better to be prepared and not have a crisis than to have a crisis and not be prepared. Mm-hmm. Chris and Adam Martinson came out early. They were way in front on this COVID-19 thing. They called me up. They go, Russ, this thing's going to be bad. I'm like, really? I'm like, I don't get it. It's just a flu. And, I'll be honest with you. I'm not necessarily convinced, from a whole medical perspective that it's really worse than anything we faced in the past, but from a reaction perspective, it's worse. And so maybe people know things I don't know. I'm not a doctor. Who's to say? I'm not going to pass judgment on that. I can have an opinion. It's worth what you pay for it, right? I mean, it doesn't matter. The fact is, the people that are pulling the levers, the governors, the mayors, the President of the United States, and all the people in between, they all have an opinion, and they think it's a big deal, and they shut the whole economy down over it. Okay, that affected me. That affected everybody. So, and all this money printing and all the things that they're having to do to try to patch all the economic problems they've created or get in front of that, that potentially has the possibility to impact me. So, but the point is, it disrupted the supply chains, and so it is going to have an impact on production. And, when Chris and Adam called and said, hey, I didn't rush out and go stock up. And then I was listening, a week and a half later, and I was on the phone with Adam, and Adam said, it might be too late, but if you have it, you should go. So off I went to the grocery store, and there was no paper towels, there was no toilet paper, there were no napkins, and a lot of the canned goods were all being taken down, and I could see what was happening. So I was in the early stages of the people who were late to the party. I could have easily been among the early stages, but I didn't listen because I let my bias affect me.
By the way, you mentioned Chris and Adam, so their book Prosper, and what's the other book after that?
They did. Chris did originally the Crash Course. Like me, he got hit hard in 2008. He's a PhD. Like I said, I'm a smart guy. He's like
great guy.
He's like, I'm a way smart guy, and I've got this fancy pants degree, and I got blindsided, so I felt like I was in good company, right? But he decided to kind of dig deep and find out, how in the heck did this happen? And he discovered the same thing we all discovered, that our financial system is corrupt and broken and doesn't really serve Main Street. And he went about trying to explain that to people, and he created this thing called Crash Course. Millions and millions of people saw it. Adam Tackert discovered him. They got together and they created this company called Peak Prosperity, and they spend all of their time educating and preparing people to think about the ramifications. And he's really the one that opened my eyes up to the idea that natural resources were limited, and that you couldn't have a financial system that demanded exponential economic growth supported by an ecological system that could not support exponential unlimited growth. At some point there was going to be, you were on a crash course, a collision course with scarcity of essential products and services. And so he watches the horizon, and I hang out with people who pay attention to the horizon, who can warn me when the next things are coming. And Chris actually his PhD is in epidemiology. So this is right up his alley. So he saw it coming early. And so that's why we hang out, right? A big part of what I did after 2008, Robert and I got together and said, hey, we need a bigger brain trust. We need a lot of really smart people that are all up on the perch looking 360 degrees at every aspect, looking at energy, looking at the economy, looking at the financial markets, looking at real estate, all the different niches. I mean, you know better than me what's going on in your niche. I rely upon you to keep me up to date. And when you give me your piece of the puzzle, and Kiyosaki gives me his piece of the puzzle, and he's a big picture guy too. Peter Schiff gives me his piece of the puzzle. Chris and Adam give me their piece of the puzzle, and my single family home guys give me their piece, and my debt guys give me their piece.
Right.
I begin to see, and then I get in these conversations.
Right.
And then I watch the news, and it's context. We live in the information age. There's tons of information. Most of it goes right by us because we don't have any context process all this information, and then we let some talking head on television that doesn't understand us at all, doesn't invest the way we invest, doesn't believe in what we believe in, who's got allegiances to people behind the scenes we can't see.
Right.
And then we default to them because they sound smart, because we don't understand really what they're saying. And I'm living proof, if you study long enough, you can understand this stuff in a practical way, and then you can begin to take action.
Well, I think that taking action is where I want to kind of bring everything we've talked about right to a head. I'm going to ask you a question. I'll answer it first, and I want you to give yours. I'm looking for, here's something that don't do this during this time. And then we'll ask the converse. Here's one thing. It could be more than one, but the point is, here's one thing you should be doing. So I'll start to give you a chance to think about it. But the one thing I'm going to say don't do is panic. Because panic is just, it's debilitating. It's going to get at your core where you can't communicate, you can't do anything. So don't panic, and don't only look at one piece of it. You got to look at the bigger, broader horizon, because the truth is out there somewhere, but you have to be able to see a bigger picture than the one little piece that you're looking at.
Yeah.
So don't panic.
Yeah. Blair Singer says when emotions run high, intelligence runs low.
Good way to say it.
And you need to be able to think. But of course, you can only think if you're actually looking at data, looking at facts, and you're trying to see things through other people's. You have to understand we all have filters. We all have paradigms. We all have blind spots. We all do.
Yeah.
I did. I mean,
I do.
Chris and Adam called and warned me, and I didn't listen because I had a filter. And I discounted what they said without looking into it. That was a mistake. So I would say, similarly, not just don't panic, but don't discount alarming things you hear just because you don't understand them or you think they're not possible. There's a thing in crises called normalcy bias. And normalcy bias is the tendency for us to reject something that takes us outside of our comfort zone so far. We just need things to be normal for our mental health. But the external world doesn't care, candidly, about your mental health. The external world is going to do what the external world is going to do. And the best thing you can do for your mental health, to borrow again from Jim Collins, is to confront the brutal facts, which presupposes you have access to them.
Yeah.
So, that is kind of the next thing. What do you do?
And I want you to hold that. Don't,
Okay.
But keep that thought.
Okay.
Because you just touched on something that I was thinking too. You said, assuming you have access to them.
Yeah.
So we're going to get back to the idea of what to do.
Yeah.
But I got to tell you, one of the things that truly, and we had a big corporate meeting on Friday, and I'm meeting with the family all the time and so on. And as dad and as leader of my business and so on, it's my job to be calm and to be collected and so on. But what freaks me out is where the media, and I really do try to look at everything, but it's really everything in one or two other sources. When you look at this all, they are absolutely putting in censorship of opinions that are outside of what they believe. And if that doesn't freak people out, thoughts?
Well, I mean, again, yeah. So it's not a surprise that there people in consolidated positions of power are either controlled, coerced, or motivated through some way to manipulate a narrative. It could be because they think they're doing a public service. I'm not going to get into the motives and the mind behind what people do. I think what's plain to everybody, which I think is absolutely awesome, is that it's happening. And people don't like it. And that's a good thing. People are responding the way they should respond, which is, this is wrong, this is outrageous. Now, there are people who think this is great because the world is going to be better if only the smart people get to talk, if only the qualified people get to have an opinion. But, if you were to go talk to any man or woman on the street and say, do you think your opinion should be valued or discounted? Most of them are going to say my opinion should be valued. Yeah. Right? Yeah. I mean, so I don't want your opinion to be valid, but I want my opinion to be valid. Yeah. Well, if you want to live in an environment where people are equal, then everybody's opinion has to be valid. And so I'm a free market guy. I believe in that. But again, I have no control over that. What I do have control over, getting back to what you do, is what Chris and Adam talk about in their book Prosper, in their 8 forms of capital that you create. One is financial capital, one is emotional capital, like you talked about, don't panic, keep your wits about you. But another one is social capital. Yes. And social capital is your network. And that's, again, Robert and I have been working hard on this for the last 10 years because in 2008, we were the smartest guys on the Investor Summit at Sea. We were the smartest guys in our sphere. Wow. And that turned out to, yeah, exactly. No, it's oh my God. That's a scary thought. These two guys.
I get that.
But you're totally right. And so we said we've got to make it our business to be as smart as we can be and be in a room where we're the dumbest guys. Yeah. And we've, I think, largely done that. You've known me long enough. I feel that I've learned a lot. And the thing I have to constantly remind myself is I really don't know. And I'm just another person trying to figure it out. I want to have a seat at the table, to add value to the conversation, to stimulate the other person's thought, so I can hear what Peter Schiff or Robert Kiyosaki or Ed Griffin or Chris Martenson or any of these smart people, Brian London, that I get the chance to hang out with, and see what they think through their paradigm. Does what I say, what I think I see, make sense? And I was talking to Dana Samuelson the other day. He's in the gold business. And I said, hey, I haven't heard anybody say this, but I really think China could drop this nuclear bomb. And I laid it all out. He goes, from what I've read, I could see that happening. Okay, well, he reads things and talks with people that I don't talk to. He might have taken the conversation the other way and said, no, I don't think so, because, and I would learn. In this case, I'd learn, okay, well, at least from his point, that's valid. I'm going to go check with other people. So I think the point is, what you do is you've got to put yourself in a tribe. You've got to be around other people that are equally concerned, equally diligently studying, have enough of a different perspective than you, that come at it, maybe a different market, a different product niche, a different educational background, a different demographical background. Maybe they're younger, maybe they're older, whatever it is, but they're going to bring a slightly different perspective, but they are intensely interested in the subject matter the same as you, and they're not interested in being right. They're only interested in finding the truth. They want whatever truth they can get from you. They will share whatever truth they think they found. They're not telling you what you should believe.
I agree.
And you're not telling them what they should believe. You're just sharing so that everybody has as much context and content. And then the other thing is, do listen to people that you think are qualified to have an opinion for the right reasons. Like I mentioned earlier, if I want to know what's going on in residential assisted living, small, single family home type residential assisted living, you're the guy I'm going to talk to, because you have your thumb on the pulse. It's your world, it's where you live, you talk to these people every day, you track it. I pay attention to it because I'm interested, but it's like the ham and egg breakfast thing, right? In the ham and egg breakfast, the chicken was involved, right? But the pig was committed. Right? I'm involved in residential assisted living, I'm interested in it, but you're a pig. You're committed to it. I mean, you're all in.
Oink, yes.
So you're the guy that I'm going to listen to.
What's really interesting is that was my same to do, which I was thinking over the last 8 weeks, because it's been now 8 weeks, hard to believe. But in the past 8 weeks, I have been having conversations with people that I respect very much about their thoughts, their opinion, what are they seeing, what are they doing? And I don't necessarily agree with them all, but it has been amazing. And also, when we started pre-recording here, saying this is an amazing time. There's so much opportunity. There's so many good things coming out of this. And we see that, and the people that I'm hanging with are very much of that ilk and that mindset. And it brings me back, I think it's Brian Tracy's famous quote, you're the, or no.
Jim Rohn.
Jim Rohn.
Jim Rohn, you're the sum total of 5 people you spend the most time with.
This is so apropos right now, because if you're hanging around
if you're a negative, bitter, scared person, then look who you're hanging around with.
Yeah.
Because that's what they're feeding. There's a lot of hope. There's a lot of opportunity on the flip side of every crisis, going on the backside and on the flip side. So even going through it, there's opportunities. And if you take that mindset, as I said earlier, that it's there, and go looking diligently with an open mind, you'll see it, you'll find it.
Yeah.
And if you hang around with other people who are doing that, they'll shine additional light and nuances and perspectives. I mean, I've learned some from you. I'm guessing you probably learned a few from me.
I have.
And that's what it's all about. That's why we do these things, right? It's why we're in this business, because the only way Main Street is going to free itself from the tentacles of Wall Street, big government, big banks, is when real people get together in the real world and have real conversations and go invest in real assets, providing real products and services to real people. And we just have to get done with all this paper, this faux wealth, this financialization of the economy, where a bunch of people who sit around and just move paper back and forth become enormously wealthy and consume all kinds of products and services with that wealth, yet they didn't contribute anything to it. Whereas the people who are out there building things and growing things and making things are being victimized by these people through inflation and collapsing financial markets and losing their jobs because these guys blow up entire industries or economies or whatever. Right? We can take care of each other at the street level. And I think if we all just go to work on that at a practical way. Yes, people need capital. There need to be capital markets. But peer lending, syndication, people, I've candidly, I've gotten in places where I've been in a financial jam and I've called you and say, hey, Gene, I'm not sure I'm going to need it, but I may need to syndicate a few $100,000 to get me out of a jam. Here's my plan. Would you stand with me for a piece of that? And you said you would, right? I called 6 other people and they told me they would. Fortunately, I didn't need it.
Right.
But that's people taking care of people.
Social capital.
That social capital translating into access to financial capital without a loan application, without a credit score run, without some arbitrary, you don't fit in a box because I got to shovel this down a pipeline and it's going to end up in Wall Street somewhere where some 25-year-old analyst is going to stamp at AAA when it's not my business, but garbage, right?
Yes.
And then it blows up the financial system and ruins lives. I have a lot of energy on that. And we are the answer. Doing stuff like this is the answer. And it's really not that hard. And I think right now people are open to new answers and they're open to learning new things. They've discovered new mediums and ways to learn new things. They're discovering new people, new voices every day. There's so many good things happening right now. But we just need to keep going. It takes leadership. It takes people out there in their own communities. I say, hey, go out and get yourself a good book on investing, or listen to a podcast. I can recommend one, or buy a video series and get a group of people together in your home. Sit 6 feet apart if it makes you feel safer, right? Do it on a Zoom call if it makes you feel safer. But watch it together, then talk about what you learned, and then ask yourself, how can we take what we learned and put it into practical application? Best ideas and action plans. And you will start to learn together. Create a mastermind group of your very own. And then as you get smarter, you'll continue to add new people and ratchet up. And I'm living proof. If you do it long enough, one day you wake up and you're in a room full of some of the most amazing, smartest people on the planet. And you're like, how did I get here? How is it that I have the right or the ability to be able to pick up the phone and ask these people to sit down and talk with me? Of course, now we bring a microphone, we put the cameras on. We're in the middle of doing our crisis investing webinar, and I just am doing the outreach right now to all these amazing people, and they're all saying, yes, I'd be happy to do it. Making themselves available. We talk to them for 20 or 30 minutes about the things we're interested in, and then we share it with people. And we're going to distribute it completely for free. It's not for sale.
Well, that's one of the things, and why we wanted to make sure to come together here is because we've dropped some names here. We talked about Peak Prosperity, you talked about Dana Samuelson, you've mentioned Robert Kiyosaki and Schiff and, G. Ed Griffin and the whole bit. So the point is, there's a lot of people that you're connected with and so on. And that's one of the things I appreciate about being a part of the tribe of the real estate guys. It's just that. And I'm harking back. I'm actually, missing the idea of the summit is always such a great event.
I know.
On land or at sea.
Yeah.
But conceptually, the idea of just sitting and, I thought it's so fun because, especially when it's days, you're trapped, you're there, and it opens up opportunity that you wouldn't have. I remember sitting at dinner and Robert Kiyosaki's like, well, Gene, what do you think about this? And it was like, wow, that's pretty cool.
Because he's curious.
He's curious. I was going to say, because he's curious. He's not asking to make small talk. No. That ain't his thing.
No.
But when he asks that, it's because he really, truly does want to know. It's a piece of his puzzle he's pulling together. But there's so many people like that. And to be clear, that's why I laughed when I said, you two the smartest in the room, because it's just filled with people with tremendous insight, and you
we've
are right
upgraded.
up there.
I mean, not to disparage the people we had in the beginning, but we were, we had a different agenda back then, and after 2008, we realized our contribution to the world was going to be to aggregate great thought leaders, great investors, and get them all in a room. And instead of teaching them, we were going to facilitate conversation between and among them, and we were going to learn from them. And if and when we felt qualified to have a contribution to make in a specific area, we would talk. But you've been on those events, 10, 11, 12 days, and Robert just MCs, and I maybe teach one thing, and that's it, right? That's it. The rest of the time, it's really other people. I get a lot of conversations. You probably
I was going to say, the best part is the conversations. It's,
absolutely.
It's the hanging out for, whether it be a drink, a cigar, or sit by the pool, where you're just there talking, and that's where, to me, that's the magic.
Well, the challenge in today's environment is putting yourself in those environments. It's harder, but that's why you got to put more effort into it. Anytime anything gets more difficult that's important, you don't give up on it, going all the way back to the beginning in our theme. If this is a great business, if residential assisted living business is a great business to be in, and the need is there and it's real, and then you want to do that. Well, the same thing. If getting into conversations and being in a room full of smart people is a worthwhile thing, the fact that you're sheltering in place or in a lockdown, or there are online places you can go, communities that are being formed, and they're not censored. We have a community for our syndicators. I know you probably have a community for your residential assisted living operators. And there's all kinds of them that exist out there. Join them, get involved, and participate, and study hard so you have something to say. Don't just be a wallflower, but put yourself out there. Study really hard, and just get one thing that you can say or think that is good. And don't try to teach or preach. Just ask a good question. Just ask a good question and let the other person talk. And you'll learn a ton. And pretty soon, you'll have something to say.
Yeah, so don't be intimidated by that, is what you're saying, because
Exactly.
I am there to absorb and listen, but I also realize that each one of us has insight. So when somebody else needs that, and I know I can share, be bold and share, because that's what they're there for.
Yep.
I learn so much more by sitting listening. I'm in 3 different masterminds right now, and there could be 50 people on the screen, and I'm just sitting there smiling and nodding and so on 98% of the time.
Yeah.
Then I'll add my 2 cents when it's appropriate.
Well, that's the big to-do.
Yeah. So we've talked a lot of different things, and we're going to give you an opportunity to connect with Russell and the real estate guys and the whole tribe. You do events on goal setting. You do events on sales. That's one that you do that I've not been to, and I hope I can make the next one you're doing, because I've heard nothing.
Well, we hope we can schedule it. We're still waiting for the hotels.
We'll do it online if not.
Yeah.
You do the syndication event twice a year.
Yeah.
You do the summit, which is the once a year large get together. You got to go to that if you haven't been to that. In addition to that, you are so good at your newsletter, and I know you personally work really hard at it. I can read, when I read it, I know it's you. It's so thoughtful, it connects so many dots, and it leads you to different things. And between all of those different things, the podcast itself, the newsletter itself, all of the different events that you have, it's a really cool community and a tribe. So if somebody wants to just get in, and just absorb, what's the easiest way to have them go there?
I think, to figure out who we are and learn more about us, you can just send an email to newsletter@realestateguysradio.com. That's newsletter at Real Estate Guys.
You're doing it. I always mess it up. Pause, do it again.
Real Estate Guys Radio, not Real Estate Radio Guys, Real Estate Guys. So newsletter at realestateguysradio.com. You send an email there, you'll get the newsletter, you'll get whatever the latest edition of the newsletter is, and then every time we send out a newsletter, which is once a week, you'll get that. When we do a live event, we'll invite you. When we do a webinar, like we're working on this crisis investing webinar, you'll learn about that, where we're just interviewing a bunch of people. Some of the stuff we do is free, like our podcast, and you'll hear about that. The crisis webinar, we do various things. We're on this initiative right now to build out our YouTube channel. Very excited about that. So there'll be a lot of free content there. And of course, some of the events, there's costs involved. Part of that is because we got to cover the hard costs of production. Part of that is because it's a filter. It's a filter so that you're only in a room full of people that are actually willing to invest in themselves. There are people who want to take, there are people who want to share, and there are people who want to give. And if you can get in a room full of people who are, want to give, but give from a position of, equitable exchange. Like I would consider, I don't mind giving first, I don't mind giving more, but at some point it's got to be equitable, right? There are people who never want to give, they just want to take. There are people who, they don't mind giving, but you give first, and then I'll maybe give something back. So I like being in a room full of people. I don't like, because if I'm in a room full of just givers and all I'm doing is taking, now I'm at the bottom of the food chain and I'm a taker. So I always want to be in an equitable exchange, sharing ideas, sharing information. But I don't mind giving more, don't mind giving first, but it's got to be equitable. When you get in a room of those kind of people, it's extraordinary because they're the right people. They're the people that make things happen. They're the people that have accumulated wealth and wisdom. They're the people that think bigger than themselves. And so it's not just making money. It's a mission. I say that, money is a means, not a mission. And when you get around people that all feel that way, now collectively you can get together, even though you're operating individually, because I don't believe in collectives, right? Even though you're operating individually, collectively you're making an impact. And that's what being a part of a tribe is. And I'm glad that you're a part of our tribe. I'm really very thankful that day I met you. First time I heard you speak, wow, I don't know if this guy is as good in real life as he is on stage, but I think I like this guy and I want to get to know him. And you've turned out to be even better than I hoped, Gene. You've become a great friend and I really appreciate our relationship.
And I appreciate you too. So, well, there it is. We covered a lot of ground and there's so much more that can be covered, but this is the beginning. And if you've never had a chance, you come out to our events so often and we really appreciate that, but here's 20 minutes and you just riff for 20 minutes on something, but now you have a little more insight and also to the tribe, the community, all being a part of it. So it's not just residential assisted living, it's so much more. And I also know, thank you for keeping it here and not going too far down in the weeds and darkness, because I do remember the first time Emmanuel came on the Summit Cruise with us, he was freaked out by the time we were done, just like, what's the point of living anymore? So he's way out of that now. He's doing fantastic, but I appreciate you being here and sharing.
You can't fix problems you can't, you're not willing to call out. So
there you go.
Thanks for having me.
You got it. Let me get through that and
All right.
we will talk to you soon. Thanks everybody. See you soon.